How quickly could you become a millionaire, assuming you just invested $500 a month? Knowing what we know now, if we could, hypothetically, go back in time and only invest in those investments that we knew are going to generate great returns in the future, how much money could we make? And if we stuck with those investments, where would our nest eggs be today? Well, since April Fool's is right around the corner, I decided to find out. Just for the fun of it, I went back and looked at 4 different stocks that have performed incredibly well since the turn of the century. So without further ado, let's find out what's really possible in the stock market. But before we get going, be sure to like this video if you haven't already, as it really does help out the channel a lot, and subscribe with notifications on for more money-related videos like this one every single week. And if you want to further support this channel, you can check out some of the links I've left in the description below, which includes a link to the investing platform M1 Finance. Get started investing for free today. Okay, so as I just said, we're going to be going over 4 different investments in the stock market today, figuring out what kind of returns they generated in the 2000s and beyond. We'll use that to determine just how quickly we could, theoretically, have become a millionaire investing in each of them, assuming we only put in $500 a month. A couple of other things to mention in the interest of keeping things as simple as possible. We'll be assuming that we made these investments inside of a Roth IRA, and that there were no trading fees that we had to worry about or other taxes and costs. And to give us some context for the results we'll be seeing today, we will be comparing them with what would have happened had you invested the same $500 a month into various index funds over the same period. Lastly, these results are not going to be the most realistic, since we're basically assuming that we had access to a time machine and could go back and cherry pick some of the best investments the stock market has produced over the last 20 or so years. So I wouldn't take this too seriously. It's all done in the interest of fun. But with that out of the way, let's get into it and look at our first investment. Tractor Supply Company, ticker symbol TSCO if you're interested, caters mostly to the hobby and lifestyle farmers, and thanks to some pretty substantial growth in the number of hobby farmers in the late 2000s and early 2010s, they saw their stock price soar over the past couple of decades. A share of the company's stock was valued at a mere 42 cents in November of 2000. By October of 2002, it had exploded to $4.27 a share. Riding the bull market following the bottom of the dot-com crash, Tractor Supply's stock grew to as high as $14.90 a share in March 2006, before unfortunately starting a slow decline that would last into the Great Recession. At the bottom of the recession, the stock was valued at a mere $6.52 per share, less than half of its previous high, though admittedly still quite a bit above where it started. However, those who managed to hold on during those difficult times were rewarded with a bull run that didn't let up until 2016. In May of 2016, the stock broke $90 per share before falling into the mid-50s over the next year. Since then, it has recovered, and at least as of the end of 2019, it was once again sitting at around $93 a share. So, if you had started investing $500 a month into Tractor Supply Company in January 2000, how quickly would you have become a millionaire? 20 years? 15 years? Try 13 years and 1 month. And it would have been a bit of a shocker, too. In December 2012, the stock was worth about $40 a share, and based on our investments, we'd have owned about 21,500 shares. Therefore, our net worth would have been around $875,000 at the time. But in January of 2013, just a month later, the stock jumped up to nearly $48 a share, and our net worth skyrocketed to $1,026,000. That's a return of about 35%, and what's more, because the stock just continued to rise from there, we would never again fall below the $1 million mark. In fact, at least as of this writing, we've closed out 2019 and we'd have a net worth of about $2.06 million. That's like having an average return of about 24% per year for 20 years. Now, the $2.06 million is a bit down from what would have been our all-time high net worth of about $2,387,000, which we would have had in July 2019. But considering that to date, we've only invested $120,000 of our own money, and have a net worth north of $2 million, I don't think we'd be too bummed about the whole situation. This becomes even more true when you compare it to the performance of something like the S&P 500 over that same time frame. Hypothetically, if we would have invested $500 a month into an S&P 500 index fund, such as Vanguard's VFINX fund from January 2000 to January 2013, we would have had a net worth of about $114,200. That's an average return of about 5.5% per year over those 13 years, which on the one hand is pretty impressive in its own right, because think about it, we started investing in 2000, which most people would say is one of the worst times you could have been investing, since we not only completely missed out on the stock market run-up of the 1990s, but we also had to experience a second major crash later in the decade, and still managed to make 5.5% per year. But on the other hand, it's certainly a far cry from having a $1 million net worth as we did in our cherry-picked example. Which is kind of the point of this video. I mean, we don't yet have the benefit of hindsight for what stocks are going to do in the years to come. So the results of our example investments in this video aren't really going to be the most likely outcomes for us when picking individual stocks. But that doesn't mean it isn't still kind of fun to imagine what is possible if we did have the advantage of hindsight going forward. And just so we have the numbers in our heads for the rest of the examples today, had we kept investing in the S&P 500 index fund throughout the rest of the 2010s, we'd end up with a net worth of about $348,300. That's an average return of about 9.6% per year over those 20 years. With that being said, Tractor Supply Company was obviously a great investment in the 2000s, but it actually wouldn't have been the best. Let's move on to our next investment. So wouldn't it have been great if you had invested in Amazon before it got big? Of course it would. Amazon has one of the greatest stock market run-ups in recent memory and is now one of the biggest companies in the world. But just how great was that run-up? Well, let me put it to you this way. If you had begun investing $2,800 a month into Amazon in May of '97, which I know is a lot, but stick with me here, you would have been a millionaire before the 2000s even began. In May of '97, Amazon was closing at around $1.50 per share. By September, it was up to $4.34. By June of '98, it was trading at $16.63. In November of '98, it broke $32 a share. 3 months later, it doubled again to over $64 a share. And the very next month, in March of '99, it rose to $86.09 per share. That is an investment that is worth over 57 times its original value in less than 2 years. And at $2,800 a month, which again is admittedly a lot more than we're looking at investing for the examples of this video, your investments in Amazon would have been worth over $1 million by that point. But like I said, we're looking at investment performance since 2000, so that doesn't count for today's video as amazing as it is. However, as I said, Amazon has grown into one of the biggest companies in the world. So even after that insane run-up of the late 1990s, Amazon still had enough fuel to produce a pretty incredible run in the 2000s as well. After falling back down to earth, as many internet companies did in the early 2000s, Amazon was valued at around $6 per share in September 2001. It wouldn't break its $86 per share high again until September 2007, when it was valued at around $93 a share. It would weather the storm brought on by the Great Recession and fall all the way to $42.70 a share in November of '08, before bouncing back and growing through the rest of the 2000s and 2010s. This may date the video a little bit, but at least at the time of this writing, Amazon stock is worth around $1,900 a share. So hypothetically, if you had invested $500 a month into Amazon stock in September 2001, you would have become a millionaire in 170 months. That's an ROI of about 30.8% per year. And while it did actually take us a little bit longer to hit the $1 million milestone with Amazon than it did with the Tractor Supply Company, Amazon would have more than made up for that lost time with its sustained growth throughout the 2010s. Because had you continued investing in Amazon all the way through 2019, your investment would now be worth a whopping $3,145,000. Which is over 50% more than we would have had in the Tractor Supply scenario. It's also an ROI of about 30.7% per year since 2001. But you know who has both Amazon and Tractor Supply Company beat in the 2000s? Apple. Yes, Apple is another one of the titans of the investing world. So much so that I know many people who have bought some Apple stock for their kids while they were young so that they could have some money to start with when they reach adulthood. And by and large, that has not been a bad investment so far. Apple, like Amazon, was hit pretty hard during the dot-com crash. In fact, by September 2002, it was valued at just 90 cents per share, and would fall to as low as 88 cents a share by April of 2003. But just like Amazon, it did eventually recover, growing all the way to $24.62 a share in December of 2007. It did, like many other stocks, lose over half of its value during the Great Recession, but after falling to just over $10 a share in December of 2008, it came roaring back with a decade-long bull run that saw it grow to nearly $300 a share by the end of 2019. And 2019 itself was actually quite a spectacular year for Apple, because it jumped from $155 a share in December of 2018 to $293 in December 2019. That's about a 90% surge over the course of a single year. Quite impressive. So how quickly could you have become a millionaire investing in Apple? Well, assuming you invested $500 a month in September of 2002, it would have taken you a mere 9 years and 7 months to cross the 7-figure mark. That's an average annualized return of over 56% per year. But it gets even better, because in addition to reaching $1 million faster than any of the other investments that we've covered so far would have, Apple also leaves you with a higher net worth today than even Amazon would have. And mind you, that's despite the fact that we're having ourselves start investing in Apple a full year later than we did with Amazon. Because a $500 a month investment in Apple starting in September of 2002 would be worth $4,178,000 today. That's an average ROI of about 35.8% per year over that time. Now that's what I call an excellent investment. Or at least I would if it weren't for the last investment I came across while working on this video, because I found a company that would have reached $1 million faster than Apple while leaving you with more money today than even Apple did. And it's by quite a wide margin in both areas. So, Monster has been kicking butt since the turn of the century. Seriously, short of things like Bitcoin, this is one of the best investments of the past 20 years. Monster was little more than a penny stock through much of the early 2000s. It was valued at 9 cents a share in February of 2002, and hovered between that 8 and 9 cents a share all the way until the summer of 2003. And that's when it finally started to pick up steam. Monster broke the $1 per share mark in March of 2005. It rose past $5 per share a year later, and reached the double-digit threshold in October 2007. After falling to $3.81 per share during the Great Recession, Monster experienced a steady rise throughout most of the 2010s, ending the decade with a share price of around $63.70. So an investor in Monster in 2002 or 2003 would have seen their investment grow to over 700 times its original value over the course of just 17 years. That would be like if Apple ended the decade at over $1,000 a share, or if Amazon finished at over $4,200 a share. That's an insane amount of growth. But since a good portion of it took place in the first few years, Monster of course being valued at nearly $8 a share by the summer of 2006, our investment would have crossed the $1 million plateau really quickly. If we had started investing $500 a month into Monster in February of 2002, we would have been millionaires by May of 2006. That's just 4 years and 4 months worth of investments, totaling just $26,000 out of pocket to become millionaires. That's an ROI of about 219.4% per year. And if we would have kept investing all the way to the end of 2019, our investment would be worth $9,242,440.28. That's an average annualized rate of return of 41.8% per year for 17 years running. And that's despite going through not one, but 2 of the worst stock market crashes in American history. That's crazy. And it is what's possible through investing. Though obviously, as I stated earlier in the video, it's not exactly what's expected. If you want to get a better idea of what is expected when investing in the stock market, you can check out my updated video on what to expect when investing in the stock market at the link that should be showing up on your screen right about now. But that'll do it for me today. Once again, if you enjoyed this video, be sure to smash that like button if you haven't already, subscribe, and hit that bell next to my name so you'll be notified of all my future uploads. I generally upload every single Monday, and if you have a friend that would be interested in this kind of content, be sure to share it with them. Let's really get this information out there and start our own financial revolution.